Hello, this is Jordan, and this video is being recorded on Tuesday, April 5th, 2022. Thank you so much for joining me today. Please like, comment, and subscribe. Also, hit that notifications bell so you will see my videos as soon as they are uploaded. Thank you for that, guys. And in this video, I'm going to analyze and answer this frequent question: will a bear market and recession take down gold? Now, quickly, it really depends on the type of recession and bear market and also the performance of gold and precious metals beforehand, and specifically their relative performance against the stock market. So I'll get more into that later. But first, let's take a big picture view and I'd like to remind everyone that in terms of secular trends, we're talking about 10, 15, 20 years, gold and the stock market, they trend opposite. You can see from this chart, when the stock market is in a secular bear market, gold is in a secular bull market. It's clear. Just look at this chart, you can see it. And in my opinion, when we see gold break above 2100, that is going to be the official declaration of a new secular bull market in gold. And so, has the stock market already peaked? Maybe it'll peak in nominal terms later this year or early next year, perhaps. I don't know. I'm just putting it out there. But in real terms, I think that in terms of gold, the stock market has peaked. So in real terms, a secular bear market has likely begun. And so this is important to understand, because the coming bear market in stocks and the coming recession, that's a major catalyst for gold. It's not going to be a negative thing. So people are worrying about something that is really going to help gold move much, much higher and, break out of the cup and handle pattern and the mini cup and handle pattern. So more specifically, I want to delve into potential correlations here over shorter time periods. Like, let's discuss, 2 years and potentially up to 5 years. And the correlation between gold and stocks, it's always fluctuating. So sometimes it's positive, sometimes it's negative. Sometimes one is going up and the other is going sideways. Sometimes both are going down. So it's all over the place historically. But I feel that people are really stuck in 2008 with that example. And I'll get to that in the next chart, but I'm highlighting here the examples of cyclical bull markets in gold and cyclical bear markets in stocks. So there's a couple of good examples here. Most notably, you have almost the entire period from 1971 through 1978. The two were inversely correlated. And so we can see that gold, obviously late 71, it started moving. The stock market had one more push to the upside. But then when the stock market peaked, it had this nasty 50% bear market. Gold went up during that, basically 90% of that decline in the stock market. And then after that point, you get to 75, 76, when gold had the 40% correction, 45% decline. The stock market went up, so they were still negatively correlated. And then the same thing happened for a little while when you had a 20% mild bear market in the stock market, and gold was able to rebound and make a significant move. And then eventually, gold went parabolic and the S&P didn't really do much. So the 70s are a great example. The next best example, of course, you have 2000 to 2002, the tech bust. Gold stocks actually bottomed before gold. They bottomed in late 2000. Gold made the double bottom. So the second bottom was in 2001. I think it was February or April, depending on if you look at the daily or weekly chart. But essentially, for almost the entire duration of that bear market in stocks, gold moved higher. So they were negatively correlated. And, more recently, I would put this this is kind of a mini example, but summer of 2018, gold bottomed. That's in the last 10 years, it's its second most significant low. there in, I believe, the mid 1100s, gold bottomed and it trended higher, and the stock market started to correct right alongside that rise in gold and gold stocks. But so essentially, if you look at the summer of 2018 to the summer of 2020, the stock market did not perform that well. I mean, gold and gold stocks performed far better. So through part of that period, the two were negatively correlated. Now, here's another look, and we're looking at the gold stocks. This is a Barron's Gold Mining Index. I have my own index that I attach to it from 1927 to 1938, but the rest is the BGMI. And these are points where I'm highlighting here points where gold stocks, or periods where gold stocks essentially trended higher with the stock market. And so the reason that's important is because that's a problem when you lead into a recession or a bear market. That's really what signals that precious metals will get hit alongside of the stock market. And so the examples here, you have the mid 1930s, 1937 to 38 was a real nasty. Or I should say 37 to 41 or 37 to 42 actually, but 37 to 38, you had a nasty initial decline in the stock market. And so, you can make the case this index peaked at 1939, but it really peaked. Gold stocks really peaked in 1937. They got hit really hard all the way down into 1942. And that was because gold stocks, from 32 to 37, they trended with the stock market. And, we saw a repeat of that in the 2000s, 2002, 2003 to 2007. I mean, both went up together, and that's why both got hit during the recession and bear market. Another example of that is the 1960s, the mid to late 1960s. You can see there gold stocks really outperformed, but, the stock market was still rising during that period. And so that recession at the end of the 1960s, that recession took down gold stocks as well as the stock market. And then we can also mention 1980. I mean, you had a little bit of a rise there, 1979, 1980 in the stock market. But I mean, that was a historical secular peak in gold, and so it makes sense that gold stocks would get hit in that recession. And of course, that's the only time the Fed went ahead of the curve and was aggressively hiking rates. Real rates went through the roof. So that's the worst period imaginable for precious metals when you have real rates going through the roof. So now if you look at the Barron's Gold Mining Index, I don't know what the construction is right now, but you can see it looks much stronger than all the other indexes. So the last couple of years, I think that's a bit of a misnomer, because this looks like, I don't know if Newmont is 100% of the Barron's Gold Mining Index right now, or if it's 50%. So that, if you look at the last couple of years, and also the last 7, 8, 9 years, gold stocks, they haven't done that well. So based on all this information, I'm not that concerned that the coming recession and bear market is going to take down gold and gold stocks. In my opinion, it's probably going to be a catalyst, at least at the beginning of it. We could potentially worry if, let's say, the recession is, let's say it's 15 or 18 months away. If we get this huge move from now over the next 15 or 18 months, gold's above 3,000, silver's at 50, then you have a recession. I would say, yeah, I think they're going to get hit during the recession. So you got to use this history, but also use some common sense. And, this is one cyclical comparison, is the 73 to 74 period. So I have the S&P at the top. The red lines highlight the bear market. The middle red line highlights the start of the recession. So the R there signals the start and end of the recession. The blue arrows mark important peaks. And, interestingly, we can see, silver peaked first during that inflationary recession, then gold stocks, then gold. But if you look at gold stocks, I mean, they had a secondary peak. It looks like in the middle of 1975. At that point, they were only 13% off the high. So, and that was still that was 2.5 years after the bear market and the S&P began. So, this is one. I don't think we're going to repeat this exactly, but we might. It's going to be variations of this in other periods. But if I had to pick one that could be instructive, it's really this period. And so again, just with the way things are setting up, this doesn't concern me yet. Obviously, if you get into an inflationary recession, even though it's inflationary, I think. Gold is probably going to perform better than silver through the duration of the recession. So, you have to be mindful of that. There's really no best answer, but, it's all context. You have to study history and look at these things. And so the way things are setting up now, I do not think you have to be worried about a recession and bear market taking down gold. The recession, excuse me, that's more significant than the bear market. So, we have the super bullish setup in gold. It's correcting, it's digesting right now. It's probably going to last for at least a few more months. And, if the stocks have obviously been holding up really well. So if we do get that breakout, which I think all of us expect, you're going to see miners and juniors really fly. Silver's going to catch up. And, later on, after we have big profits, I think then we can worry about, will a recession take down the market, or how do we adjust our portfolios and benefit accordingly. So this video went a little longer than I wanted, but hope you got something out of it. Let me know what you think. Follow all my work here, subscribe to the channel, check out my premium service. Thank you so much. I'll see you in the next video.